Well, hello and welcome to this week's update. Well, we saw that the markets broke this important trend line last week, and then what we did is we actually set the opening range, which is 92% accurate, and we can see right now that we've actually broken that opening range, which the lower end was 3837. We've broken that to the downside, and we are continuing to sell off. Now, we know that the Federal Reserve was speaking last week and they raised rates by 0.75%, exactly as I had anticipated. Now, the markets pretty much had that baked in, right? But what they didn't have baked in was how hawkish and how aggressive the Fed was in their forecast going forward. So that caused the markets to sell off more than anything else. It's much like when a stock comes out to report their earnings. It's not so much the earnings, it's what they forecast going forward that really has a big bearing on where the stock's going to move, and very much the same with the market and the Federal Reserve. Now, next week we've got to be mindful because the Federal Reserve is still speaking. Different members of the Federal Reserve will be talking. Jerome Powell himself will be talking on Tuesday and Wednesday. Certainly the markets will be listening to that. Consumer confidence will be coming out, and different Federal Reserve members will be talking as well. So we need to be mindful of that. That could certainly move the markets. Is he going to come out and try and calm the markets down? Who knows? But that is where we're at with news. Now, as far as where the markets could move, well, let me just show you one other thing. I've been talking about the US dollar as well, and I said, look, what I expect is a move back down to the trend line. And now we've formed a bull flag, I expect it to break higher. That's exactly what's happened. That, when you see the US dollar breaking out to new highs again, that causes markets to move down. That causes risk assets to move down, cryptocurrencies to move down. So it's putting a lot of pressure on the overall market as well. So that's a big issue also. So there's some of the things that are going on. Now, if we have a look at the overall market, and if I just have a look on the SPY, which is the overall market, same thing as the SPX. Now, where do I expect this to move to would be the question. Well, now we've broken the opening range. I'm looking for it to move down. Okay, so I can drag this across. And what I'm probably looking for this to do ultimately is to erase all of the gains that we have had since the pandemic stimulus bonanza, right? And what does that mean? That means go back down to 340, 337 in that zone. Remember, support is a zone, not a specific price. So around that 340, 337 ultimately is where we're probably going to go. Now, 357, 360, that support zone has a pivot here. We may get a little bounce off that. We are oversold, okay? So we could short term get a bounce because right now the RSI is below 29. And, we've got this level here, right? So some people looking at this going, well, couldn't this be a double bottom and we bounce from here? We are oversold. So that could happen, okay? But I think ultimately with this trend line here, I think a move up to there, which I don't think it's going to even get up there, to be honest, and then start to move down again. I still believe there's a lot more downside to come, ultimately down to where we moved down from just before the pandemic hit, right? This is pre-pandemic. That's the pandemic crash, and obviously we've had that huge move up. I think we're going to come back and erase all of that. So the Federal Reserve, with all your trillions of dollars of money printing, causing out of control inflation, now causing interest rates to be risen very aggressively. Great work, great job. The market's right back to where it was before all of this happened. Goodness me. The Federal Reserve is always overdoing it. They always go to the extreme. They always go too far. They went way too far. Their overreaction to money printing was extreme, unnecessary, ridiculous, and that's what caused this incredible move up. That's what's caused the inflation. And now we're going to come right back down to where we started from. Incredible. Now, what are they going to do with raising rates? They're going to go too far again. they're going to continue to try and fight this inflation, try and bring it under control, and they're going to raise rates rather than let the economy deal with a rate rise and then let it filter through. They're just going to continue to raise rates. Again, going too far, going to the extreme, and that's going to cause some problems. Maybe a protracted recession, maybe a long, drawn out, sideways, choppy, downward market, something like that. So that's where we're at. Now, as far as the amount of stocks now that are above their 50-day moving average, only 11% of stocks are above their 50-day moving average. Now, the SPX put call ratio, when we look at that right now, that is showing us that it is bearish. Okay, 1.52 is bearish. The XPX actual put call ratio is certainly bearish. The combined put call ratio, the 10-day moving average of 1.05 is actually bullish. The skew of just under 119 is neutral. The trend of 1.5, that's neutral as well. But if we come here and we have a look at what is going on here, let me just show you this. Where are we? Here. There we are. Right. So we come here and we look at the stacked moving averages, right? So we've got the 89, 55, 34, 21, and 8. When they're stacked in that sequence with the 89 on top, 8 on the bottom, that's showing you a downtrend. So certainly the SPY, or the overall market, is in a downtrend using those metrics. They're based on Fibonacci numbers with the 13 missing. And then on a weekly, we're below the 89. That's bearish. And then even on a monthly, we're below the 21, so that's bearish as well. So we're getting those three time frames, daily, weekly, monthly, on the overall market, all showing us bearish signs. So goes Goldman Sachs, so goes the market. We have a look here. That is stacked bearishly, well below the 89 there with Goldman Sachs. If we look at junk bonds, we can see that they are stacked bearishly as well, right? High yield bonds, they're stacked bearishly. So we've got a lot of bearishness going on here, more than enough for me to start setting up bearish positions. Just taking small risks here at the moment because we are at an oversold point, but I still want to set some bearish positions up on the overall market. With that much bearishness, that many market internals telling me that the markets could move down further, I want to be setting something up to protect and profit from the markets moving down. Now, if you look at high yield bonds are really an indicator of the risk appetite of the market. Okay, how much risk people are willing to take. Now, if you look here at high yield bonds, they did have a bit of a double bottom forming here. People were expecting it to bounce. What did it do? It moved down. It broke that level. So that's a bearish sign for the markets. Okay, when we're seeing the risk appetite of the market move down, high yield bonds move down. High yield bonds tend to precede the SPY by 2 or 3 days. So my view is that SPY, while it does look as if it could have a double bottom here, and we are oversold, maybe we have a little bounce, but ultimately we're going back down again, right? That is my viewpoint there. Now, I believe we're going right back down to where this all started before the pandemic, back down at 340. Okay, that's ultimately where we go. Not straight away, not within a week, maybe a couple of weeks for that to play itself out. And high yield bonds, a bit of a bearish pattern here, a bit of a head and shoulders pattern there as well, which could see the markets move down. So this is something here where you're getting high yield bonds moving down. The risk appetite in the market is not there, preceding the SPY, so that's a bearish development as well. Brings down all asset classes, obviously except for the dollar, which we've been talking about for quite a while. So that is showing a lot of pressure on the overall markets. Now, as far as positions that we had on from last week, we had Google looking for that to have a bounce. It didn't. And we're looking for Amazon to have a bounce as well. That did not, right? So those two trades, we were stopped out of those trades. We lost $183 on both trades, $183. Now, the one trade the week before that made almost $700 for one contract, a 243% return. So losing trades are part of this business as a trader, right? When I have a losing trade, I look at it as a business expense, nothing more than a business expense. And I continue to find asymmetrical opportunities that are skewed in my favor. I respect risk. I trade my plan. I stick to my plan. I follow my rules-based system. A losing trade is nothing more than a business expense and gets me closer to a winning trade. Right? No emotion about it. One winning trade this week that we set up could wipe out those two losers, $183, and get us miles ahead, right? So not a big issue. Again, what I was saying was don't take too much risk ahead of the Federal Reserve announcement. Sit on the sidelines, but if you were going to take a trade, here's a couple of trades with very small risks. Okay, so those two were stopped out. Part of the business, right? No emotional response, not getting upset. That's okay. Now, this week, with my overall view that the markets could move down to 340 ultimately, may have a bounce here on this 360 level, 357 level, but ultimately down there. I'm looking to take a trade out to November, right? Out to November, the 18th of November, 55 days from now. And let me just show you this one. Now that one was a little more. Now there's two ways you could do this, right? The SPY. Now, right now trading at 367.95. Okay. Now I'm looking to take this out to the 18th of November, 55 days from now. Looking for it to get below 350. Ultimately, not right now. Within a few weeks, getting down to around 340. Ultimately. Okay. So what I'm going to do is I'm going to sell the 355 put, buy the 350 for $145 of risk. Okay, $145 of risk. My potential upside is $355. My break even is $353.55. I've got no stop on this particular one. I'm risking $145 to potentially make $355. Right? So that's what we're looking there, about 2.45 times higher my potential risk than 2.45 times higher my potential reward income compared to the risk that I'm taking to try and achieve that. Now, a more aggressive approach you could do is to widen that spread, right? So buy the 355, sell the 345. Okay, $270 of risk there. Potential upside is 730 or a 270% return on risk without taking into account your set and forget trade with a stop and a profit taker. So my break even is 352.30. My stop in this case would be $1. Okay, so 270 going out. If I get stopped out, $1 come back in. So I'll be risking 170. My profit taker, I'm setting at 780. Okay, 780 minus the 270 I spent to get into the trade leaves me with 510. So if I could make 510 per contract with a risk of 170, then my potential profit is 3 times higher than my risk. Asymmetrical opportunity in my favor. So that's certainly a trade that you could look to get into as well. Fixed limited risk, $170 and 3 times as much potential profit if in fact it does get below 345 come the 18th of November, right? So that's how that works. Now, I teach my members how to set this up as set and forget. So you don't even have to watch the charts. You don't have to sit there and monitor it all day. You go about your life. You set the trade up. You enter your primary order of 270, your profit taker of 780, your stop of $1 called a bracket order. You set it all up at the same time, and it is a set and forget trade once you're actually filled in the trade, obviously, right? It's then a set and forget. So that's a very good way of doing it. Takes a lot of the emotion out of it, takes a lot of the problems out of it, which is you and I, right? We found the enemy, and the enemy is us. We want to try and take ourselves out of the picture as much as possible. Why? Because we're emotional around trading. We're emotional around money. We want to keep a very systematic approach. Now, a couple of other trades that I'm looking at is DDOG. Okay, there's one. It's now broken this support level that you can see there. Okay, so this is one that I'm looking at. Just waiting for my charts to catch up. There it is there. So we can see this support level here. It has now just broken that. There's a pretty significant trend line there. As far as where it could go to, I think a target of around that 69.70 level, this pivot low here, that's probably where I'm looking for it to go. But I'm going to set up a trade where all I need it to do is go below 80, just below 80. I think it's ultimately going to 70, but ultimately that's where it'll go, I believe. But 80 is where I'm looking for it to get below. If it can get below 80, I can make a very good return on a trade setup that I've just shown my members, where we could make, again, a 3-to-1 in our favor. Another stock that looks bearish to the downside is Now. Now has broken this trend line here as well, certainly breaking significantly below that level. If we look at it on a weekly chart, we've broken the 200-day moving average. Okay, 200-day moving average has been broken, and if you look at this, we've got a pretty big looking bear flag there on Now. Okay, so we've broken that now. We've broken the 200. That is certainly significant, and I would say the first area would be around 357. It's $20 from there, and then if it does break that level, the next pivot down would be around here, just above 300, about 302. So what I've done is I've set up a trade there. I'm looking for it to get below 350, and if it does, again, I can make a 3-to-1 on my risk. Again, very small risk. All of these are very small risk. Not taking a lot of risk on any one of these trades. That's the smartest way to do it right now. Let's see what happens with the overall market, but my view is more downside. Ultimately, over the next 2 to 3 weeks or so, moving down to 340 on the SPY. All right. So for all the reasons I explained, that is my theory, and I hope you guys enjoyed that. Hope you learned something from it, and there are a couple of trading ideas that we're looking to get into this week as well. All right, my friends, my name's Sean Allison. If you've got any feedback and you'd like me to continue to do this, again, only with feedback to support at cashflowoptions.com.au, cashflowoptions with an S, .com.au. If I get enough feedback there from there, I will continue to do this. I'm sort of always seeing, because I've got a lot of things on. My time is precious, and if people value this, great. If they don't, that's fine. I will just do plenty of other things I want to do, right? So you guys let me know, and I will talk to you guys again next week. All the best, and bye for now.